of all the major companies that I've covered on this channel, I've been missing one major juggernaut, and that's Tencent. If you're going to invest in China, Alibaba's one way, but the other way to invest in China is Tencent. And I always say invest in both because I don't think that they have enough overlap to choose one over the other. So if you have both, you have a lot of diversification into the Chinese economy. And so in this video, finally, after you guys asking for 2 years now, I'm finally going to do a full breakdown of Tencent. And for those of you who are on the Patreon, you already have access to the model. And so while you guys smash that like button, let me run that intro. What's up, guys? And I'm glad to finally provide you with this video, a full breakdown on Tencent. Now, I'm still learning the business and I'll continue to learn the business, but what I'm trying to provide to you guys in this video is a thorough breakdown of the company and sort of what I think it's valued at. Now, I'm not going to make you guys wait until the end of the video to see where Tencent is valued at, or at least where I think it's valued at, and where it stacks overall against the global technology powerhouses. Let's go into that right now. So you can see here, I'm valuing Tencent, and this is just their ADR. I'm valuing them at approximately $60 per share. And so you can see, compared to their current share price of $40 per share, the company's trading at approximately 70% of its intrinsic value. And where does that stack up relative to its closest Chinese competitor? Well, Alibaba, you can see, I think is more mispriced. And this is why I've been focusing so much on Alibaba and not so much on Tencent. Alibaba, I'm valuing at approximately $225 per share. And they're trading at $85 per share as of the recent close. And so they're trading at 40% of their intrinsic value compared to 70%. But I really would love to buy Tencent at, under $30 per share, which it has gone under in 2022. Now, the other names in the technology space, of course, dating, which is Match Group, that's come down to approximately 55% of its intrinsic value. And what that really speaks to is how much the share price for Match Group has come down in this environment. So I got to review that model. The last time I updated it was November 15th, but I'm going to review it again. Meta, everybody's aware of the Meta opportunity. People are valuing this at much greater than $200 per share. I'm giving it $175 per share valuation, but you can see that it's trading at approximately 70% of its intrinsic value. With Alphabet, same thing. I'm valuing at approximately $130 per share, so the current share price reflects around 70% of the intrinsic value. And of course, Microsoft, which is, any company that's highlighted in green is a company that I absolutely want in the portfolio. It's trading at approximately 70% of its intrinsic value as well. So effectively what you're seeing is it's a toss-up between Meta, Alphabet, and Microsoft where sort of like Tencent lands. So all of these companies are trading at approximately the same amount to their intrinsic value. And that's not done by design. That just sort of has what has transpired with the share prices coming down as the market has sort of been coming down overall this year in 2022. But I did mention just a moment ago that I do want to purchase Tencent at under $30 per share. And I just want to show you guys how this has cost me to not have built the model up until now. So you can see that there was a brief window where Tencent actually did come under $30 per share. Now, there are no options available for Tencent's ADR, and so this would be just like a limit order or just like sit and wait for it to come down. Now, if it's trading at $33 or $34, would I actually just wait for it to come down to under $30? No, absolutely not. I'd start building a position. In fact, I'd probably start building a position where the current share price is right now. But I just want to point out that if I really, really wanted to go big on this name under $30 per share, I missed the boat. And I missed the boat because I knew to build the model on Tencent a long time ago. I just was sucking my thumb. And so, unfortunately, I was late on building the model. But we'll see what happens in 2023. I want you guys to let me know if you think that Chinese share prices will decline in 2023, or do you think that they will relatively stay stable while I think everything else kind of declines in 2023? Or do shares even decline in 2023? I take the position that they will, but I could be wrong here. Now, I know a lot of you guys have been waiting for that Tencent model, and I just want to point out that you can get access to the Tencent model, the Microsoft model, the Alibaba model, the Match Group model, the Alphabet model, all of the models that I just showed to you guys, and many more because I blacked out quite a few of them. You can get access to them all at this lower tier of the Patreon. And so the question overall when it comes to Tencent is, what is this company? What do they do? And if I were to describe Tencent in a couple of words, I'd probably say that they are a digital juggernaut. So if I were to say that Alibaba is a retailing juggernaut, which I think they are, and they've actually doubled down into grocery and sort of like group buying in the retail space. So Alibaba, I would consider the retail juggernaut of China. Tencent is the digital juggernaut of China. And so where this becomes a bit of a challenge between Alibaba and Tencent is where they overlap. And I think the main area where they're going to overlap these two companies is fintech and cloud. And so we'll talk a little bit more about that as we get into the segments for Tencent. And so overall, you can see that Tencent is largely two businesses, and this is how Manish Pabrai would describe them. And so, you have their key services businesses, and then they have their investments of listed and unlisted entities. Now, I'm not going to spend a lot of time on the investment side. I will break this down in a future video, but what I want to focus on are their major segments. And so they describe their major segments as social networks, gaming, online advertising, and fintech and business services. And in here is where you'd have the cloud business as well. And so let's dive into it. Now, I love this visual that they provide because what they're showing us is the flywheel that continues to grow out Tencent's digital dominance. And so what you're seeing here is you have this super app, which is, WeChat and QQ, so super apps, which sort of drive the consumer into these other segments of the business. So if you have a WeChat app, of course, you can get into their gaming segments. You can access digital content. Of course, you can pay for stuff by using their mobile payments platform. You can sort of use their browsers as well. And I think the cloud sort of like is the backbone to a lot of this as well. And a lot of their service providers who may not necessarily even be an internet business. It might just be a company that gets accessed through some of this stuff, but is not, a traditional internet company, would also start getting their back end supported by Tencent's cloud business or segment. And so you can see how this flywheel, which is the WeChat platform, continues to grow other flywheels out. And so you have sort of like a multiple flywheel strategy. Dive into this a little bit more because you can see, of course, that if you start playing games on Tencent's gaming app, of course, this builds out with just more and more games. The digital content, same thing, more and more digital content and different types of digital content. So all of these become smaller flywheels to the overall larger flywheel. So I love that they provided this visual because it's a great visual to explain how Tencent is expected to continue to dominate the digital space in China. And so that is a very future-focused type of business strategy, which is exactly what I'm looking for when it comes to answering question 2 of the 4 questions that we answer when we look at companies, which is, does the company have favorable future economic characteristics? And I would say that Tencent has more than favorable future economic characteristics because they're very future-focused with how they're growing out their business using that flywheel, multiple flywheel strategy. And just to dive into their apps a little bit, so you can see that this is how Tencent compares to the apps of the world. So you can see that, their QQ and their WeChat are very similar to sort of like Messenger. And I would have put in WhatsApp here, but whatever. And then, they have their Q Zone and their Moments, which really come close to the Facebook and Instagram apps. They have QQ Video and Tencent Pictures, which, are similar to YouTube and Netflix. Now, just FYI, Alibaba also has a competitor for YouTube or QQ Video. So just FYI there. Now, their QQ browser, I believe this is the #1 browser in China. Correct me if I'm wrong in the comments. They have WeChat Pay, which compares to Chrome and PayPal. And then, of course, if you want to order a cab or order food, they have Didi, which compares to Uber. They also have access to JD.com, so there's a partnership there. And so that compares to Amazon. So there's a lot here in the Tencent ecosystem, which compares to a lot of major companies in the globe. So of course, Meta, you got Alphabet here, you got Netflix, you got once again Alphabet, PayPal, Uber, Alphabet again, Amazon, Expedia, Ticketmaster. So just a lot in the digital space that falls under one umbrella with Tencent. And I'm not telling you guys anything that you don't already know about Tencent, but it's interesting to see it sort of like broken out relative to the global competitors. Now, the first area that I want to start with is their WeChat platform, and then how it sort of relates into the digital content. I'm going to leave games as a separate segment on its own because they also break out games separately. And so let's dive into this major area of the business, and then of course the sub area of the business. And let's start with the financial statements. So notice that social networks make up 1/2 of the value-added services business segment. And the value-added services segments makes up approximately 50% of the overall business. And so, of course, social networks is the smaller subsegment of the value-added service segment. Games, of course, is the larger segment, but we'll cover games separately. And so when it comes to their social networks, you can see that they have WeChat, QQ, and QZone. I don't really know what QZone is, but, you know, when I think about WeChat, I think this has 1.3 billion users. This is the newer app. QQ was the older app. They started in 99, and I think they have like 800, maybe 900 users, 900 million users. And so, of course, these do act as gateways to the other services that Tencent provides. And so let's diving in a little bit more into WeChat. So this is, of course, the most widely used Chinese communication and social platform, and it integrates instant messaging and social entertainment, bringing a mobile digital lifestyle on an easy to use app. And that's how they describe themselves, of course. And, you know, as of at least 2020, they had 1.2 billion monthly active users. I think that's increased to 1.3 billion monthly active users as of today. And just to provide you another visual of the WeChat ecosystem, so you can see that through WeChat, you can access services. You know, I was talking about how you can order food and such, but you can do a lot more than that. You can, of course, shop. So remember I said they had that partnership with JD.com, but you can also order food. You can do scan and go retail services. So similar to Fresh Hippo with Alibaba, I believe. And so, you know, you have access to that as well. You also have access to videos. And so this is cool because they have the integration with the QQ app. So it just blurs the line between QQ and WeChat. You know, most people will just have both downloaded. You obviously can enter the games area. And so the Tencent Gaming Center. This is what Microsoft is trying to compete with. And this is why I do believe that the FTC cannot stop the Activision transaction, but we'll see how that plays out. I'm obviously invested in that. You can access content, of course, through WeChat, so Tencent News. And then, of course, you got your chat, your groups, your moments, which is Instagram. And interesting that they list that you can buy gift cards as well. But just, it's a super app, and you can do a lot with. And, you know, you guys know that one company that's trying to build out a super app right now, at least in the home buying space, is Zillow. And Zillow just wishes that they could have what Tencent has. But we'll see how Zillow tries to grow out their super app as well. Take a look at Zillow's presentation if you want to learn more about that. But let's dive a little bit further into this ecosystem. So I'm not going to keep this up for long, but you can see in the chats segment of WeChat, you can access money transfer services. You can access your albums. You can do video calls. You can do video messaging. You can access your camera. So of course that would just keep an online album. So that's really cool, especially if you don't want to use your cell phone's hard drive, or if you don't want to be limited by your cell phone's hard drive. So I really like that. You know, there's coupon services as well. So in the sort of like me section of WeChat, you can, you know, access your online payment cards. You can transfer money, of course. You can access loan providers, so probably banks. And of course, that is all a part of just your wallet. And then, of course, when you go into the Discover segment of WeChat, you know, that's how you get into your games. This is cool, like message in a bottle. I'd be interested to see what that is. You know, you can see people nearby, which is a little bit stalkery, but I understand it, especially in the dating space. I'd probably make a lot of sense that you want to connect with people within a certain area around you. And then, of course, your contacts, you can sort of keep everything online. And so I really like how they separate the hardware from the software. And you can, by just having a WeChat account, you can even just replace your hard drive to your phone, which is great because I think one of the stressors of changing your phone is transferring everything over. Well, if it's all on WeChat and it's all backed up, then you don't really care about getting a new device. You just log into your WeChat and everything's there already. So I really like that, and I didn't notice that was a thing until I started researching WeChat. But I like that it's all centralized in one area. Take some time to get used to all the features, of course, but I am assuming once you get used to it, it's just easy like pie. Now, just moving into their smaller social media platform or social platform, this is QQ. This was originally launched in '99, so I guess it's the older platform, and it looks like it's primarily used for online chat, video, and voice calls, and of course, transferring files. And so it's got approximately 800 million monthly active users as of March of 2020. So that might have grown a little bit. We'll see if they provide more disclosures on that. And this is what QQ looks like. So it looks really nice. It's pretty much what you would expect from sort of like a video call platform. And so once again, they say it's primarily used for online messaging, casual video and voice calls, document sharing, and social networking. And what I want to focus on is the future focus area of this. And so notice that Tencent continues to upgrade their social networks, including live streaming and sharing through social on WeChat, and the build out of immersive metaverse-like experiences in the QQ app. So here's what I mean. So they are now working with sharing live content on their sort of like Facebook type app. And so this is really cool because it can increase the number of users using live content or viewing live content because more and more people are able to share it. And so I think that's really cool that they're now focusing on live, and it's something that we've been a bit weaker on in North America. And so I like that they're moving in this direction. We'll probably get here in the next little while as well. And here's what's really cool. They've really moved into the metaverse space. So I like the fact that you can socialize with virtual avatars. And so here's where, real-time learning could happen, or just, like going to shows and stuff. So it's cool. I don't believe in sort of like the metaverse the way that, some of the people are characterizing it, where your whole life is going to be on the metaverse. But, how cool would it be, for example, with our Patreons, where, once a month, instead of having a Zoom call, we just all meet up in sort of like an environment, and I can, present whatever I want to present, but everyone else can sort of like share as well. And, we just sort of like start interacting with each of our avatars as well. It's like, I see a value there. I also see a value from just, concerts or stand-up comedy or anything along those lines. And so, as this sort of grows out and sort of matures into what it should be, I see value here. And so I do see a value for Tencent to be focused on this as a future-focused digital products and services provider. So I like that they're focusing on this. And so that covers off the communications and social segments or subsegments. And so now let's get into the gaming segment. This is the area where this is the reason why I was actually shy on building out the model for Tencent. And it was really because the CCP went after this segment and actually pointed out Tencent as the main sort of like adversary. And of course, you don't want to be in the bad books of the CCP. And so this is where I was worried about this segment, but let's dive into it because I don't think it played out as badly as I thought it would have. And so just a reminder, guys, that the gaming sub segment is the second half and the greater half of the value-added segment. And so, of course, this is their largest segment right now at 174 billion RMB. But of course, I think the fintech and cloud segment will eventually overtake this. And so Tencent will become a fintech and cloud service provider by and large. I think the gaming segment, the social network segment, and even the online advertising segment have a slower growth trajectory than fintech does. So once again, for a lot of people that are investing in Alibaba Cloud for, the growth in the cloud segment, I actually think that Tencent might actually give you more levered growth to cloud than Alibaba could. And I will explain that in a second. But let's dive into the games that Tencent actually owns. So you can see here, this is put together by a third party. So, look at it with a grain of salt. But notice what game studios that Tencent owns. So they own Riot Games, They own Epic Games, or 40% of Epic Games. You can see that they own 5% of Activision Blizzard, which I thought was interesting. They own 5% of Ubisoft, which again is interesting. I think a lot of these other studios are sort of like online game studios, like mobile game studios. I'm not sure. I haven't heard about a lot of them. And then, of course, interesting that they own Discord. Now, I also have a Discord. It's a free Discord for the Patreons. And if you are a part of the Patreon, join our Discord. The link is in the Patreon in a pinned comment at the top. They also own Roblox, and so these are undisclosed positions. So it's just interesting how many sort of like game providers they own. Now, this is what I was worried about. Now, recently, this issue has gone away. So the Chinese industry body declared an initial victory in reducing game addictions amongst minors. And so hopefully it's going to ease regulations in the gaming space. And so what they're saying is that more than 75% of games or gamers under 18 years old have capped their playing time to 3 hours a week, which is kind of exceptional if you think about it. And so the result comes more than a year after China's video gaming regulator imposed strict restrictions on playing time. And so this is why I was worried about Tencent, and I was hesitant on building out the model. I probably should have just built it out anyways, but it is what it is. And so you can see here, a year ago, Beijing actually stepped up its scrutiny of the sector after a newspaper that was affiliated with China's news agency published an article that labeled online gaming as spiritual opium. And I'm going to talk about why you never reference opium in China for some of you guys who are not aware of what connotation this word actually holds. And they singled out Tencent Holdings as the main source of the problem. And so I think that, and that was really scary to me. And I was really worried about what the government could do to Tencent. If they could pull the rug on their whole gaming sector the way that they did to the online education sector, you could see why I was really worried about Tencent. But I think the days of the CCP going after the domestic video game industries is done for now, at least. Sorry about the spelling error there. And so the report comes on the heels of the recent granting of 70 new video game licenses this week. Recall, guys, that they froze the licensing for the past year. And so the second highest number of licenses that were released behind the 73 issued in September. There was just a large backlog, really. That's what was going on. And so I hope that the CCP does not continue to go after domestic gaming. I don't think that they will. And this is why I say that you don't call anything opium, anything in China. Recall, guys, that the Opium Wars were fought between China and Great Britain. So this is the first war, which is 1839 to 1842. And then there was a second war between 1856 and 1860. And, a week in China fought both Great Britain and France during their empire eras. And so China lost, and the terms of its defeat were a bitter pill to swallow. China had to cede the territory of Hong Kong to British control, open treaty ports to trade with foreigners, and grant special rights to foreigners operating within the treaty ports. And so that's okay, but here's the real problem, and this is the WTF moment. In addition, the Chinese government had to stand by it as the British increased their opium sales to people in China. The British did this in the name of free trade and without regard to the consequences for the Chinese government and the Chinese people. So you can see why I'm personally very sensitive to anyone using opium as a term to anything else as they relate to addictions in China. And I think when the newspaper used that, they knew what they were doing as it relates to gaming. It is absolutely not on the level of a real opium addiction, but you can see once again why it's a sensitive topic in China. And guys, there's more people in the comments who actually live in China, and I want you guys to really let us know exactly how much weight that connotation holds in China. And so let us know in the comments below. I'll pin the best comment. But let's dive further into the gaming segment. So you can see their gaming segment is broken up into two sub-segments. So they have domestic games, and so they cultivate sort of like their IP franchise. And then they also have a international game segment. So you would be aware of some of these segments. So there's Pokemon, Clash Royale, or Clash, I guess, Valorant, and League of Legends. And so, I think a lot of us are very familiar with their international titles. And so when it comes to them providing the results for the value-added services, I'm happy that they break out the domestic and the international subsegments of this segment. And so notice that the revenues for domestic games is down 7% year over year. But of course, it's down a lot less than what I would have thought. And to me, this is actually a good news story, the 7% here. And so let's just take a look at what they're saying. And, they're saying that revenue was down 7% year over year as transitional industry challenges resulted in lower paying user counts. And the revenue from HOK and Peacekeeper Elite decreased in the first summer vacation under current minor protection measures. So I think, they will find a way to move forward from those sort of like minor protection measures. And I think overall, the domestic game segment continues to grow out as well. And so I don't think you're going to have weak comps going into the next couple of years, but we'll see how this plays out. Now, overall, year over year, the value-added services segment is down. The social networks is up, and international segment is down slightly as well. And so we'll see how this plays out. I think you could probably still have an additional decline in 2023 as we go through sort of like a global decline. But overall, into the long term, I think this continues to grow out. But I want you guys to let me know what you think in the comments below. Now, just forecasting out the value-added segments, I'm sorry if this is a little bit small for you guys to read, but notice that in 2022, I'm forecasting the value-added services segment to decline by 2.5%, so the revenue. And then in 2023, I'm actually a little bit optimistic here. I'm forecasting it to grow 7.5% and 7.5% thereafter as well. And so I'm going to continue to grow it out in the low single digits. I expect the segment's concentration to overall company revenues to decline as time goes on. And the reason for that is because I'm expecting the Fintech and the business services segment to grow out at a faster rate than any other segment in the company. But we'll talk more about that later in this video when I get to that segment. And so next, what I want to cover is actually that segment, the Fintech and the cloud segment. So Fintech and business services, they group these guys together. But of course, you can see that it's the number one, or their Fintech segment is the number one mobile payment app by monthly active users in China. And they believe that their public cloud service is the number one provider by revenue. I'm assuming that Alibaba is the number one. And of course, as you guys would know, that in order to access their WeChat Pay or the QQ wallet, you got to go through these social networks. And so, Tencent's fintech services leverage the WeChat and QQ to connect people with their financial products and solutions. And, they've built an ecosystem around this for the financial sector to collaborate with partners to provide innovative financial services such as mobile payment, wealth management, loans, and security tradings to users around the globe. So here's where sort of that flywheel continues to spin. And as it relates to cloud, notice, guys, that Tencent Cloud is the third largest provider in China right now. But I'm going to explain to you guys why I actually am very afraid of Tencent Cloud. And I actually think Tencent Cloud could potentially be the number one cloud provider in China over time. And I really like their strategy. And so let's dive into that a little bit more. So notice that Tencent is actually doing the hard work, but also the most value added work, which is what's been generating the high levels of growth for Tencent Cloud. And ultimately the reason why I think Tencent can become a very strong challenger to Alibaba. And what is that work? Well, they're helping non-internet companies, key focus is non-internet companies, embrace their digital transformation, which is resulting in increased adoption of their solutions and a higher revenue diversity. And so you have your Tencent Cloud Enterprises, you have AI, and you have their real-time communication. And so I think as they continue to focus and become the hub for non-internet companies, they could potentially be the largest cloud provider and become the major basis platform, similar to like how Microsoft became the major platform for computer operating systems. So we'll see how this plays out. I might be wrong here. You guys let me know how I'm wrong. And so public sector organizations are also leveraging Tencent and increasingly using their key SaaS tools. And so you're now seeing a collaboration between sort of like the public and private sector as well. And so I just think Tencent is on a roll here, and I wouldn't discount them as a challenger to Alibaba. And even in a tough environment, notice that overall the comps are great. It's grown 4% year over year. It's not huge, but in a tough year, the fact that this segment has grown, what is it going to look like in a good year? And so, I'm forecasting this beyond 2022 at 15%. Now, I might be a little bit aggressive in the medium term, but I do believe that overall, this segment will be the fastest growing segment for the company as a whole. Now, when it comes to forecasting out Fintech, notice that I'm forecasting a 1% growth in 2022. So I'm essentially forecasting a little bit of a slowdown. I don't think we're going to get that slowdown. I think they're going to continue with that 4% in 2022. And then in 2023, I do expect growth to pick up. I might actually decline this one or decrease it down to maybe like 7.5% in 2023. But beyond that, I do see 15% growth for the next 5 years. And then I bring that down to 10% thereafter. Let me know how you guys are forecasting the revenue growth in this segment out. And let me know why I'm too aggressive, or am I a little bit pessimistic? Because recall, Alibaba did tell us that the cloud segment is expected to grow at greater than 30% over the next little while. And so should we be forecasting higher than 15% for this segment? I don't know. I think I'm being a little bit pessimistic, at least, especially on sort of like the medium term. I might be a little bit optimistic on the very near term, but I want to know what you guys think. And so the next segment that I want to talk about is our online advertising segment. Recall, guys, that this segment is actually growing the slowest. And so it's actually becoming a lower and lower portion of the overall business. Now, the reason why I think that's actually a good thing is because advertising is very cyclical. And so the more you can like get rid of the cyclicality in your business, probably the better. Now, advertising has been declining as the economy has been slowing down. So of course, you're going to see that this segment is declining right now for Tencent. But as we forecast this segment out, we need to sort of keep that in mind and remember that the advertising business will pick up in the medium term. So here's how the results have played out year over year. And so overall, you can see that there was a 13% year over year decline. And so that's really tough comps. And really what's happening is that there were just lower bidding densities resulting in lower eCPM. So I think that's just a nice way of saying that the advertising spending is just declining because, if you have fewer people bidding, of course, you're just going to have lower pricing. Limitations on launch screen ads, restrictions on ads for elderlies and minors, as well as personal information protection laws have hit this segment. And so that's fine. But notice that WeChat's daily active advertisers actually increased by 30% year over year. And once again, guys, I do believe that, because advertising is cyclical, it will pick up in the medium term. So although you are facing challenging economics right now, I don't think they persist over the long term. We will, of course, go into the recession. I'm sure, North America is probably going to hit a recession in 2023 if they already haven't. I mean, we have seen year over year GDP declines. And so what does that tell you going into 2023? And so when I think about the online advertising, forecasting it out, I'm forecasting a decline in 2022, which might actually be a little bit too optimistic with the 2.5%. I might have to increase this. I'm not really sure about it just yet. 2023, I might have to bring this down a little bit more. I don't know. Like the problem with China is that most people expect China to grow at around 5 or 6% in 2023. And so growing this segment out just a little bit faster might actually be the reasonable number. And so I probably won't change it. And then, of course, in the medium term to long term, I'm also expecting it to grow out at 7.5%. And so, I'll learn it better, but it's a tough segment to really forecast because of the cyclical nature of advertising. However, I think this is reasonable. Now, just diving into their investments a little bit. So this is what I call business number 2, which shows up on the balance sheet. The investments are stated at fair value through profit and loss, or OCI, are counted as excess capital in my valuation. The remainder are integrated into the valuation itself. So you notice that they have different types of investments. So they have investment in associates, investments in joint ventures. These results generally get consolidated into the P&L, but these ones, the fair value through profit and loss and fair value through OCI, yes, these also go through the P&L, but I will strip these out in my valuation and include these as excess capital items, because effectively it's just shares that they own. And so the other items that I would include as excess capital would be the cash. Look at how much cash they have, and then the restricted cash as well, and the term deposits, and the financial assets at fair value through profit and loss. So probably all 4 of these and just 2 of these, so the most liquid of these. But these 2 guys, I don't think I'm going to include as excess capital. And you can make an argument that these guys are also not included in excess capital, but you guys decide how you want to do it. This is how I'm doing it. Okay, now let's get into the valuation. So I think the best way to value Tencent, and I could be wrong, is the free cash flow per share valuation methodology. This is net of stock-based comp. I think you have to take a position on what you expect stock-based comp to be in the future and then deduct that from your free cash flow valuation. I think that's integral, very important, especially for technology names that do have high stock-based compensation. So I don't see a lot of YouTubers talking about this, but it's very important. And so just using a terminal discount rate of 11.5%, a multiple of 20 times earnings, I'm valuing them at approximately $60 per share, which of course is that 70% of intrinsic value, which is what I showed you early on in this video. Notice that excess cash is negated by a large amount of liabilities. Now, some people believe that you shouldn't discount all of the debt on the balance sheet, and so some of you guys will have valuations that are much higher than this one. But if I was to take over Tencent, the first thing that I'd do is get rid of all of that debt, especially in a rising interest rate environment. And so my valuations are just more conservative than what other people would value companies at. But that's just how I like to do it. Now, the other area that you might want to consider is the earnings per share valuation. And so here's what it looks like. So you can see overall, using the same multiple and discount rate, you can see that the earnings per share values this company at approximately $55 per share. So very similar to where the free cash flow per share valuation methodology is. So around 70-75% of its intrinsic values where it's trading at. And so you don't want to see these two fluctuate considerably anyways, and so I'm glad that it's sort of like in line with where it should be. And once again, guys, if you want access to all the models, including all of the models that were discussed on this call, you can get access to all of these models at that lower tier of the Patreon. And if you want to join us for an epic live conversation about investing, what opportunities I'm seeing, etc., you can join us at that higher tier. Now, earlier on in this video, I did say that Tencent is just one part of the two-headed dragon in China. And so from what you saw in this video, you see that there isn't a lot of overlap between Tencent and Alibaba, especially if you understand Alibaba in a lot of detail. Now, if you don't understand Alibaba in a lot of detail, or you want a refresher on Alibaba, click right here, because this is my 10-part series on that Alibaba Investor Day presentation. This year, they did not put out a presentation, which I was a little bit bummed about. But what I will do in subsequent videos is I will do my own sort of like Alibaba Investor Day view of the company and its current status. And so stay tuned for that. But for now, to get a refresher on Alibaba's Investor Day, click on this link right here.